What's up everyone, it's Scotty with MoneyVest. In today's video, I will be going over one stock that I do believe has a lot of potential. It is still down over 40% from its all-time highs. A very nice, high-quality business, consistently growing revenues and earnings, and it's also trading at, I would say, a reasonable to somewhat expensive valuation. But we're going to take a look at the intrinsic value to better figure out where is this stock buyable. I'm going to lay out the intrinsic value and, of course, the technical analysis as well. As always, if you enjoy this video and find it helpful, make sure that you drop a like and subscribe to the channel if you haven't already. I would really appreciate that. And again, links to our Discord and Patreon is going to be down below. If you want to get access to the special pricing, which is going to be a 51% discount that's available right now, and this will give you access to all the members-only private videos, all the content that I'm posting on Patreon, as well as all the trade alerts and trade ideas, options alerts, as well as the launch for the MoneyVest beta launch here that we're going to have. You can have early access, and this pricing is going to be locked forever. And this right here is the platform that you can access with, again, a lot of really cool data points, including our MoneyVest metrics. You can do some very high-end research and quick analysis, fundamental analysis on a lot of different companies, including kind of visualizing a lot of the data points from income statement, balance sheet, cash flow. You can select exactly what you want to include. So let's just include free cash flow here, operating cash flow, investing cash flow, whatever. And you can visualize a lot of these things, and analyst estimates, future expectations for price targets, and even EPS and revenue are going to be included, as well as ratios, insider transactions for individual companies. And then eventually we're also going to be including a lot of other functionality and tools. And of course, we got our discounted cash flow model and discounted earnings multiple model as well, with the sensitivity grid that you can also access. So link's going to be down below if you are interested in joining us. And again, we'd love to have you on board with a special 51% pricing off, discount off that you can access as well. So the company that we're looking at today is going to be a stock which is down year to date almost 4%. They actually reported their earnings recently, and this is a company in the software technology sector. It's got a very similar model to Salesforce, and this is a company that is actually using Salesforce technology, and they have the rights to use that technology until September of 2025, after which they have their own CRM, customer relationship management software, that they're going to be integrating all their clients, and they're going to be moving all their clients over to. And this company, of course, if you haven't guessed already, is going to be none other than Veeva Systems. So Veeva Systems is an American cloud computing company focused on pharmaceutical and life sciences industry applications, headquartered in California, founded in 2007. And the software as a service company in the life science industry. So it's a CRM platform specifically for pharmaceutical companies, for healthcare, for life science industry. And the company went public, of course, in October of 2013 with a market cap of just over 27 billion. And now, of course, it has increased its market cap to now sitting at just a little bit over $29 billion. So there hasn't been a lot of increase. So this right here was actually during the time 2013. It is up a little bit over 317% from those levels, and of course right now consolidating sideways a whole lot. Did they say 27 billion? So as of May, okay, I was gonna say like, no, that can't be the IPO market cap, because obviously it's gone up significantly from those levels. But as of May 5th, 2022, the market cap was around 27.5 billion, and right now it's sitting at just over 29 billion. So we're just consolidating sideways a lot, and the stock is down over 40% from its all-time highs, almost 50%, with very oversold levels as well. So it does have a moat. So it does have a strong moat that might extend to small, medium businesses as well. And this right here is something that you need to remember, is that Veeva has a contract to use the Salesforce platform that ends in September of 2025, and a 5-year winding down period during which Veeva might continue using the Salesforce platform combined with some of Veeva's own solutions for its customers. Nevertheless, during this 5-year period, there will be limitations on the additional subscriptions Veeva can sell to its existing clients. And during the first half of 2023, Veeva was working on the migration of its clients from Salesforce platform to Veeva Vault CRM. So that's what they're calling it. That's what they have been building. And that's really where the migration is going to take place. And as expected, CEO Peter Gassner expected early adopters for its Vault CRM in 2024, which he mentioned in the call in the first quarter 2023 results. Nevertheless, in the call for the second quarter 23, Gassner said the Vault CRM has already gained its first client as well. So this was a report from a recent analyst as of March of 2024, and this is a note from May 31st, 2024, just a few days ago. Veeva earnings, service challenges, and guidance cut spook investors, but we remain bullish. Near-term challenges and headwinds, but long-term outlook remains very, very strong. So wide moat Veeva Systems reported strong first quarter earnings and marked a solid start to its fiscal year. Total sales of $650 million, up 23% on a year-over-year basis, and came in above the management's previous guidance of 640 and 643 million. And that said, we saw another cut in the full year sales guidance. About 2/3 of the change was attributed to the worse than expected services demand, with the remainder coming from stronger foreign exchange headwinds as well, albeit a small magnitude in the change, a decrease of 30 million to 2.7 to 2.71 billion dollars. So again, a very, very small shift in the guidance here from the company, kind of forecasting some headwinds related to some softening demand for service industries, and that again is down from 2.72 to 2.74 billion. And this revision follows a cut guidance from last November, and we think the market showed a lot of pessimism, and the stock was down about 10% after hours. So very, very overdone. They've got a fair value of about $270 on this stock as well. So this right here were the numbers which the company reported recently for fiscal first quarter 2025. Revenues at $650 million, up about 24% year over year. Subscription revenues were $534 million. That was up 29% year over year. Operating income came in at $155 million. That's up 152% year over year. Non-GAAP operating income, $260 million. That's up 66% year over year. Net income was $161 million. That was up 23% year over year, and non-GAAP net income was $247 million, so about $250 million, and that's up 67% year over year. And net income per share, fully diluted net income per share, 98 cents per share, and that was up compared to 81 cents same time last year. Results in the first quarter exceeded our guidance on all metrics. We are investing for durable growth, and I'm confident our commitment to customer success and product excellence will enable us to execute on significant life sciences opportunity ahead. That was from the CFO and board director Tim Cabral. This right here is the balance sheet. So balance sheet also is very good for the company. So cash and short-term investments are sitting on about $1.5 billion, and total assets at just over $6.1 billion, of which $439 million is goodwill. So really, really small piece of the entire total assets is in goodwill. And by the way, you'll be able to analyze all of this in a very, very quick fashion using our MoneyVest platform. So just under the MoneyVest metrics, you can quickly analyze a lot of these multiples, a lot of these things. For example, in financial health, you can look at goodwill as a percentage of total assets, inventory as a percentage of total assets, and then you can also look at stock-based compensation as a percentage of operating cash flow, revenue, and free cash flow as well. It's going to give you a little bit of a check mark, NNM score, which is the MoneyVest score for specific metrics and items for each company. So we're looking at $1.5 billion in cash, and total liabilities are $1.3 billion. So the company's got more cash than all liabilities combined at the moment. So that again is very strong. And this right here is the growth on a year-over-year basis. Revenue up, operating income, gross profit also up, operating income also up, net income also pushing higher. So all across all the board here, we did see increase in the companies in terms of revenue, gross profit, operating profit, net income as well. So margins also getting better for the company. So moving forward to this right here is going to be Veeva Systems. So if you take a look at the earnings expectations here, so we're looking at revenue to go up from about 2.3, 2.4, 2.7 billion for this year to as much as $3.8 billion. So that's going to be the growth expected for Veeva Systems over the next 4 years. And then EPS expected to go from $6.16 to over $8.90, almost $9 per share. And again, if you come over to statistics, you'll take a look, balance sheet, negative $4.7 billion in net debt here. So total cash that the company's sitting on over here is $4.7 billion in the first quarter of 24. Is that really correct? Let's see. So maybe they do have some long-term assets as well that they're sitting on. So total current assets $5.2 billion. So of which cash, short-term investments $3.5 billion. What? I thought it was something else. It's okay. So $4.6 billion. I don't know. For some reason, it kind of felt like 300 million something, but it's actually 3.5 billion. Okay, 4.7 billion dollars in cash and short-term investments, and total liabilities are 1.3 billion. So yeah, that is absolutely a stellar balance sheet from the company. If you come over to statistics, take a look at margins. We're looking at a gross margins of about 73%, operating margins of 23%, net margins of 24%, return on assets, equity, and invested capital also pretty decent, 9-12% here for the company. Now, valuation is high, 52 times earnings, a little bit under 12 times sales, and 25 times cash flow. So if we assume for the earnings expectations for this year of just over $6.16. So if you come over to our spreadsheet, let me just quickly bring this over. Just give me 1 second. And if we just look at the $6.16 in actual earnings per share, just give me 1 second while I pull up the spreadsheet here. And we're going to switch this over. Boom, boom, boom. And there we go. So this right here is going to be the valuation model. So we're going to look at the earnings for Veeva Systems over the next 5 years. So I'm going to plug that in, VEV. And let's just say $6.16 is the earnings expectations. And by 2027, we're expecting for $8.90. So $8.90. We're looking at 13% growth rate, and that's going to be just under $1 billion in net income, so $995. And then let's just grow this number by 14% growth rate from years 1 through 5 and give them a 25 times P multiple, 12% discount rate, 10% margin of safety, no share dilution, no share buyback, although we can take a look on what the shares outstandings have looked like. So statistics, if you simply look at the shares outstanding on an annual basis, it's been going up just on a steady pace. So now we are looking at a intrinsic value for Veeva Systems at close to $150 per share. There's only about a 17% pullback needed in order for it to be trading at its intrinsic value at the moment. And this right here is going to be the entire sensitivity grid that you can take a look based on different P multiples and different growth rates. We're looking at different fair values, of course, but 151 to as much as 160, I think, would be a very reasonable intrinsic value for Veeva Systems. So let me know in the comment section down below, what do you think about this company? But that's going to be aligned with this support level that we have discussed. So very, very strong area of support here for Veeva Systems that you can watch. And again, a huge area of resistance and supply sitting right over here at around 217 to as much as 235 for Veeva Systems. And like I said, a massive support area of demand, as well as the intrinsic value sitting in the 150s for this company as well. So let me know in the comment section below, what do you think? It is now coming down to somewhat oversold levels on the daily time frame. You can see that it's already oversold and it's starting to recover back higher a little bit, but 150s I think would be very attractive for this company over the long term. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And don't forget, there is a 51% discount for the MoneyVest beta launch right now. You can lock this pricing in forever. On top of that, you can also get a 16% annual discount, and you'll have early access to this platform where you can very quickly analyze a lot of different stocks, a lot of different companies, visualize a lot of the trend analysis for them, and calculate your own intrinsic values as well. As always, happy investing. I'll see you all in the next video.